Hey friends, Ernie here with Trader of Futures, and today we are going to discover trades in the market. How are we going to do this? We're going to do this by using volume profile. And we're going to allow volume profile to show us the market structure. What we're really after is understanding where the market finds value, not where we find value. Because what we think means nothing. The most important thing is what the market thinks and getting in line with what the market thinks. And that's the thing that most people have an impedance with. They have their own ideas, their own thoughts, their own intuition, their gut feeling where the market's going to go. But the market is telling you where it's likely to go. All you have to do is listen to it, see it, feel the market structure. It's right there in front of you. And so that's what we're going to do. We're going to do a quick exercise and look at a couple of futures, commodities, and determine where the market has determined where there's value and where there isn't value. I say that all the time, where there's value and where there isn't value. And the reason why I keep on saying where there is value and there isn't value is because the line of demarcation between those two things is where it all happens. That is what you have to recognize. That is where you find good trades with very low risk. I don't know how many other ways to say that. The line of demarcation, the thing, the area. Sometimes it's not an exact line. It can be a range of prices, but it is up to you to determine, just how tight that line is. But it's the line between where the market finds value and where it doesn't find value. It is where the hills and the valleys come together. The hills and the valleys, the nodes, the wells, the value node and the volume wells. Value, not value. Is it sinking in? All right. So what we'll do is we'll take a look at chart. Well, here is a chart of the Dow Jones. And we're looking at about a week's worth of data. We're coming up on March, as you can see. We have our volume profile over here on the right. The light blue area represents 70% of all the volume that we see in this chart. And we can see that there's a massive, huge volume node right up here at the top compared to the other volume nodes. So a lot of value has been built up in this area. And you look at the chart and you're saying, well, okay, it's going swiggling up and coming kind of consolidating. And it doesn't really tell you the story just looking at the price. But when you see that value node, you go, my God, look at that. And look at the edge there. It is so profound. The edge on the top of that value node and the edge at the bottom of that value node. The one at the bottom is a little bit more profound only because the well that's underneath it is much deeper. Much less volume down there. We've established even more volume up top. Now remember, our general rules are that price is rejected in volume wells and attracted to high value nodes, particularly the POC, the point of control of that particular value node. That's the highest point. And it's not really attracted to the POC. We just use that as kind of a visual cue about where the market is honing in on, where the market has already established where it finds the most value, and that is the POC, the longest horizontal line in that value node. We know that price wants to go there. And when it doesn't want to go there, it might want to find out another value node and another POC. It'll go searching out for them. And in that search, it must much go across a volume well. And that journey across that volume well is going to be very telling. And that is where the action happens. So I look at this, and the first thing that I want to do, and if we were to fall back on our rules, remember the primary steps in trading volume profile. First, know your market, the macroeconomic and political influencers. This is a constant study. You know, I mean, we look at today, President Trump is over in Vietnam. Good morning, Vietnam! I had to say that. Everybody is saying that. Reference to an old Robin Williams movie. Great movie, by the way. He's over there, and basically he walked away from Kim Jong-un in their talks on potential denuclearization of South Korea. He walked away. He said, we don't like the deal. You're not coming to the table serious. I'm walking away. And I'm sure that stuck in the craw of Kim because he wanted to get some of those sanctions undone. Now, why am I talking about this? That has political influence on the markets. That has influence on the markets. While Trump is over there in Vietnam, the Democrats are over here trying to sully his name by dragging out some guy that's going to be going to jail in 2 months and saying, this guy has all the skinny on Trump. He's going to tell us the truth. Well, he's going to jail for lying. So we got this political strife at home, attacking the president while he's, away. Isn't that brave? But that also has impact on the market. Trying not to get too political here, but I mean, it's just so obvious. The economic condition of our country, our great country, is fantastic. It's great. All the economic reports are pointing to continued growth. Yesterday we had the EIA report, that's the Petroleum Status Report, and there was far less oil in our reserves than we expected. What does that mean? That means that unexpectedly, the country used a lot more oil. It used it in the production of what? Energy. What would we need energy for? To power our factories, to power our cars, our automobiles, transportation. Things are moving, and it did it at a much higher clip than what we were expecting. A mammoth difference. That's a great bullish sign for the market. But this political stuff is tempering that bullishness. It's keeping it down. But here we can see that at least on the chart, we are consolidating. We're finding value here, right? At one point we tried to escape. Escape velocity wasn't enough. And it seems that we keep on pounding on this edge. If we bring in more of this market, we'll see that we are in a very, very definitive uptrend. Man, is that an uptrend? Or is that an uptrend? That is an uptrend! And you can see that we've gone through all kinds of hills and valleys to get up here, but we just trucked right through it. That's because the economy is strong. So what is your bias? What is your market bias? Because we come back down to, this. Know your market. What is your bias? That's what we're trying to determine here. We're trying to determine, are we more bullish or bearish? Then we want to find and identify short, medium, and long-term direction. Well, I think that in all of those cases, I would say that long-term, we're definitely bullish. Because if you look at long-term, we go way back. We have to put in a daily chart to see the Wayback Machine. And I need to show you the chart. We go way back to 2009, and there's nothing to say, but we are bullish, and we're in a big consolidation up here. Consolidation is a continuation pattern after a bullish run like this, just like this one here, and this one here, and now this one here. On the medium term, the last few months, the last year, well, you look, this consolidation came over a whole year, since 2018 all the way to 2019. And now we're in the beginnings of 2019 and we're taking off. So January goes, so the rest of the year goes. And we're knocking at the door at all-time highs. Yes, we have a big volume well here. We have these two lines, these two cyan lines here. I marked those off, kind of showing a demarcation of the market. You know, we have one below here and one above. Those are really significant because we came down to this below one and we bounced off of it. We're bouncing off of it. We're now right in the middle, almost near that POC. You can see at the present moment, 25,961, right there. Earlier, yesterday, in the past couple of days, we came up and we tried to hit that volume well, that edge, the edge of the node, where there's value and where there isn't value. And when we hit that edge of the node, once we break into that volume well, price will either get rejected and come back down, or it will run right through it because we don't like to be there. So that line right there, my friends, that is where the trade is. That is where the trade is. We know that once we enter here in kind of a breakout mode, we're either going to go right over to the other side of the pond, I guess you can call that like a little pond, to this other value node and perhaps even overshoot it, or we're going to get rejected back down into this value area here. We can put a very, very tight stop up here. Perhaps take a 5 to 6 to 7 to 1 return if we do enter that volume well and go up. It's probably worth a couple of shots at it, you know? Maybe 2-3 shots at it. Still will make out. So we go to the very shorter term, you know, the 1 hour. We can see there's that same, well, see, these lines are showing you where that big node was. And this is a more localized node because we're zoomed in. And we can see that right up here, that's the line of demarcation right there. If we can get beyond that. Now, so we have a minor node here. That's quite interesting. Right there. It's right about there. So it's not an exact line. It's, you know, somewhere in there. I'm just going to choose the middle of that. If we can break through there, there's a good chance we're heading up to this line. And then if we break through there, there's a good chance we're going much higher. There are your trades. There's your I guess your short-term or medium-term trade and your longer-term trade. Actually, this is a short-term and medium-term trade. It's not hard to see. It really isn't hard to see at all. It's right there, right in front of you. But again, it takes some research to give yourself that confidence that that is the direction that we're going in. Why wouldn't I have direction that it's confidence it's going in the other direction? Because of my my macroeconomic and political studies, my understanding of the market, the tension, the balance of tension, you know, the consolidation that we've had, the economic reports. All of that is saying it's bullish, despite the political pressures here at home. I'm sure that once Trump comes back, all the little Democrats, they'll scatter. Sorry if you're a Democrat. So that's today's lesson in finding trades with volume profile. You can do it yourself. It's easy. Just find that demarcation, that line, the precipice between where the market finds value and where the market doesn't find value or finds no value. It's not where you decide where value is, it's where the market is. All you have to decide is where is the most likely way, or what is the most likely way that we will traverse that market structure. And then all the other trades will open up to you. All right. Well, thank you very much. That's all I've got to say for today's show. Make sure to join my live stream on a daily basis, usually at 1 o'clock, but today's at 2. But, 1 or 2 o'clock. Live stream. Great show. Be there. Take care.